Hi everyone. We have just been through a very interesting April and now we approach May. In May, the Singapore banks will report their first quarter results. In this week's video, I'm going to give you a preview of what to look for in the results. I will also ask you whether you should be looking to buy Singapore banks for the high dividend yield that they actually possesses, or is it something that is misplaced among investors? And thirdly, I will share with you my trades on Singapore banks, as what we have actually told GCB Global Investors in our previous investment classes. As usual, do give us a like and subscribe, and do join us for our next class, which is actually happening on 17th of May. That is basically in 2 weeks' time. While you and I know that Singapore banks will actually give very good dividend yield in the next 2 years, in fact, next coming results will actually testify to that. But should you be buying Singapore banks for its high dividend yield, or should you be concentrating on other metrics? But before that, I just want to bring you back to my last video on Singapore banks. Yes, you can see now in that video, I've shared with you, ladies and gentlemen, that while I was keeping my OCBC stake, and in this case, my OCBC stake at the time, it was actually valued at $1.4 million, and I was sitting on a profit of about $500,000. Yes, ladies and gentlemen, at GCB Global Investors, because we actually advise and help to guide family offices, high net worth individuals, and index fund managers. We don't actually play small, we play big in the market. And because we play big in the market, you know that we have to be very precise and we have to be very correct in our calls, in our understanding of the fundamentals of each of the companies that we cover. So, well, if you like what you see and you reckon that you can want to join us in the prescient timing of banks in and out of the market, do join us on 17th of May class in 2 weeks' time. Now, back on Singapore banks, in the last video we actually covered and we told you that at $45 and more, as you can see, this is an expert of what I've said in my last video. Yes, ladies and gentlemen, so above $45 and more, I was taking a lot of my profit. And yes, in the same video, I've told you that once Singapore banks fall below $38, which it did in a couple of days in April, thanks to Donald Trump, I actually bought back some. And now the share price has actually gained by 10%. So what will guide me in actually selling again or keeping DBS as my core holding, or should it not be? But before that, let's talk about whether Singapore banks, is and should be viable because of its dividend yield. Now, if I tell you, ladies and gentlemen, that Singapore banks pays high, good, great dividend yield, is this something new to you? Well, it's not, right? So understand that markets are efficient markets. So if it's actually new news, that is actually old news, nothing new news, then the share prices of the Singapore banks will have incorporated that inside. So you and I know, everybody knows. So when they report good dividend yield, it's not going to share and it's not going to move the market. So it is old news. Secondly, I want to actually talk about the dividend yield. In this case, you can see, ladies and gentlemen, that Singapore banks are actually giving you dividend as well as actually buying back shares, and this both combined will actually determine basically the yield to the shareholders like you and me. Now, DBS in this case is the highest at 11%. Now, the first thing I want to ask you, ladies and gentlemen, is this sustainable? Well, let me know in the comments below. Now, to me, I reckon that it's not sustainable because, in the first place, you shouldn't be buying Singapore banks for its high dividend yield, because at any time, Singapore banks, as you can see, way back in 2020, MAS actually, because of the COVID problem, have actually advised Singapore banks to actually crimp down on their dividend yield. If I may, I just want to tell you and read to you that MAS actually in 2020, July of 2020, at the top of the COVID-19 crisis, they have advised Singapore banks to cap their total dividend for FY 2020 at 60% of the previous year's numbers. And offer shareholders the option to receive dividends to be paid in scrip. Now, while MAS says that the Singapore Bank's positions are strong, the dividend restrictions are a preemptive measure to bolster their resilience and capacity to support lending to business and individuals through an uncertain period of time. So remember, ladies and gentlemen, do not buy Singapore banks because of its high dividend yield. Because at any time, for example, if the tariffs have another rout again on the markets. And if Donald Trump goes crazy again, for which is highly susceptible, then what do you think will happen to Singapore's bank's dividend? So do put in your comments below. So yes, ladies and gentlemen, I bought back DBS at 38. So at what price will I be selling? Well, it's something that I'll share in my next class on 17th of May and the reasons why. So what to expect for this coming set of results? For three banks that will start announcing in the month of May. First and foremost, understand that the net interest income. Now, the profitability of banks are actually determined by two prongs. One is actually the NI or the net interest income, and the NII, the non-interest income level. Now, understand that Singapore Bank's net interest income is on the way down, as you can see in OCBC's latest set of results, where the net interest income was only up just 1%, whereas the non-interest income is up 22%. If you look through the other three banks, it's the same direction. Now, the key thing to understand, ladies and gentlemen, is that the NI, the weak numbers, is because of two things. One is actually the SORA, the interest rate is on the way down. Bank lending is not as strong as what it used to be. Whereas the NII is actually up because of two things. One is the wealth management fee as well as trading income. Let's explore this further. The conditions were such that the banks were able to trade and make a lot of money in the trading income, and all three banks actually exhibited that. As you can see, OCBC fourth quarter showed an exceptional, and then they will use the word exceptional trading income, where the profit actually rose from 1 billion to 1.5 billion. Yes, ladies and gentlemen, it's up of hefty 50%. So if you have been trading as what we have been doing, have you been making 50% in the trading income? If not, do join us for our next class on 17th of May, where we'll suss out for you and filter out the good stocks and which levels to actually get in. That's what we told you. Sell DBS above 45, buy back below 38. That's what I've done, because it's something that I've shared in my class. Secondly, is that if you move further, the other thing that I don't like, and something that I want you to be cautious about is the NIM. Yes, ladies and gentlemen, NIM stands for net interest margin, and that has been coming down. So take a look, everyone. That the net interest margin, for example, for OCBC latest set of results, is that they have been coming down from 2.29% as of fourth quarter of 2023, that is a year before, down to 2.15%. Yes, that's almost a 15 basis points drop in just 5 quarters. And that trend continues, ladies and gentlemen. It's just that the magnitude of the decline may slow, but it's still underway down. Shares versus DBS is because of this. Since our last recommendation, as you can see, the yellow line is the OCBC share price. The blue line is DBS. So since my last video, you can see, ladies and gentlemen, and thanks for watching our video and telling your friends. Maybe that's why OCBC has outperformed DBS in the last 3 months since our video actually came out. So you can see further, and we reckon that this outperformance is likely to continue. And for reasons why we will share later in our. Now, the next thing that I don't like, and I reckon that you should be careful about in this next coming set of results of Singapore banks, is that wealth management fee will likely to continue to narrow. Yes, Singapore banks have made a lot of money on wealth management fee because of the influx of funds from overseas as well as rich individuals settling in Singapore. Is this sustainable? Well, they had a big up and now they are coming down, as you can see. So the red line, for example, by DBS shows the most significant drop. And if you have been a DBS client, especially at the private banking side, and you've gone to many of the lounges, so-called lounges that were around, they are no longer around. They don't even serve coffee in the private banking lounge anymore. Can you imagine that, ladies and gentlemen? So that's why you notice that they've been cutting down the costs. Well, How much more can they actually cut to save costs? Left to be seen, because that is an attempt to actually improve the bottom line. But if anything, it exemplify that the wealth management fee will continue to narrow, particularly so for DBS Bank. And then last but not least, if you look at SORA, notwithstanding the little turmoil that you saw in the 10-year bond yield created from the Liberation Day episode in the first 2 weeks of April, you can see that things are settling down, but nonetheless, it is on a decline mode for SORA. So with lower interest margin, don't expect the NI of the various banks, that means the net interest income of the banks, to really outperform. As I've said, in this coming set of results, expect NI to actually grow slower. Hopefully, it's still positive, because for DBS, I'm not so sure whether they can continue to post what they have been able to achieve, and henceforth, why I sold above 45. Last reason why I don't like Singapore banks, well, essentially it's very simple. Look at the costs. It's been creeping up, as you can see, and this is apparent in DBS Bank. In the last 4 quarters, it's been a steady climb. To what level will actually they hit? To the point where services and the level of services are compromised. Well, that's left to be seen. But most importantly, ladies and gentlemen, this last slide actually shows you that as well. This was slide I showed you in my previous video. One of the reasons why I sold off my stake in DBS Bank, that's around 77 shares on DBS Bank at $45. Was because, as I pointed out to you, they were approaching a price to book 2 times. Now, we shared in our past video that DBS is no Goldman Sachs or JP Morgan or Morgan Stanley. While this is a good bank, the quality and standard, is still far behind these American, counterparts. So in that case, it should not be trading at 1.9 price to book. And true enough, you can see that price has been smashed now, because once a stock's been priced for perfection, like what DBS was at $45, as I've highlighted in my past video, you notice that essentially taking profits then and there allowed me to buy back bigger. In fact, a bigger position, more than 77,000 shares below $38. So yes, ladies and gentlemen, when it comes to investment, the key thing is to be able to prepare. Sell first at a high price so that you have the ammunition to buy back big, irrespective whether it's the same stock or other stocks. So to be able to have the foresight, to be able to have the prescient understanding of this, goes back to understanding fundamentals, goes back to understanding where the banks are headed, and goes back to my own experience. As you know, ladies and gentlemen, I worked 3 years in Wall Street, was probably Singapore's youngest head of research at 27 years old at Nikko Securities, and I used to hate the equities arm of major broking houses in Singapore before I retired in my early 40s. And UOB, you can see that both are trading 1.1. So that's basically the reason why I'm still keeping my OCBC shares, valued at $1.4 million, and simply because the price to book, is still cheap relative to DBS and relative to its past performance. So as usual, hope you liked and enjoyed this week's video, and do actually go with me to see how the Singapore banks actually will report the results, how to trade, and hopefully you can join us for our class on settlement in May, where we will highlight to you other stocks that you can make good money on as what you have done so for DBS and OCBC. Till next week.